Located. Thank you. Just want to say good afternoon and thank you for this opportunity to share this information regarding the overview of the 396 form. My name is Rhonda Collier. I am the Grants Management Officer for the Child Support Program. Kind of still new, recently appointed. I've been in this role as of this week for 7 months. I'm the replacement. I took the place of Ed Panak, who is still with the Economic Independence portfolio, but he is now with the Child Care Program. So I am on today along with a few of my amazing team members that are on this call with me as well. They are here to provide support as well. I'm going to do an overview of the 396, and then if there are questions that you may have that I possibly may not be able to answer, have the answers to at this moment, then I do have some team members on that can possibly answer those questions. If those questions still cannot be answered during this training or during this call, we will get that information to you at a lot of time. As Melissa said, the PowerPoint slides to this presentation will be forwarded to you. So I am going to move on with the training or presentation of this. Just want to start off by saying a couple months ago, I did a training on the notice of award, breaking down how that award is to be read, the notice of grant award that is received each quarter. And from that, it was birthed the desire or the need for this overview to understand that the numbers on the notice of award actually come from the 396 report. So that's what we'll be discussing on today. I will probably turn my camera off because I'm going to be looking at my larger monitor for the screen, and it's for some of the notes. So I don't want to get you thrown off by me looking at one screen and you can see my face. So if you can see the PowerPoint presentation, could someone just unmute and say you can see it?
I can see it.
Okay, thank you. So let me get ready to move forward here. So this is the agenda for this presentation or training today: a program overview, general reporting instructions, fiscal life cycle of the 4D awards, reporting deadline, timeframe, terminology, OCSS-396 Part 1, line by line discussion on that, Part 2, which is the prior quarter adjustments, detailed discussion on that, payment management system, resources, and then if there are any questions at that time, then we'll open it up for questions. So I'll start by just giving my synopsis or Rhonda's verbiage for the federal child support. Can someone hear me? Do we have a question? Oh, I'm sorry, I thought we had a question. So I'll start by giving an overview of what I have come up with of the Federal Child Support Program since I've been working here in the past 7 months. I see this as a program that ensures that children receive the financial support regardless of living arrangements. It facilitates the establishment, enforcement, and modification of child support orders, ensuring timely payments, promoting the well-being of children across the nation. I feel that this program also provides resources, legal assistance to custodial parents, helping to maintain a stable and supportive environment for the children. And that is my take on what the child support program is. And I know all of you who love working in this program see and feel the need for this program. So this that you see on the screen right now is actually a blank Part 1 396 form. But throughout this presentation, there is one that is completed that I will use as an example to just to give you an example of where these numbers are actually coming from and how they tie into the notice of award. So what you see on your screen right now, these are the laws and the policies that regulate the program. So you have and I'm going to send this link, this PowerPoint slide out because these are actual clickable links that you can click on for more information to do further reading on it. But these are all the laws and the policies that guide this amazing child support program. So we're going to start with what a state must have, what is required to operate the 4D program. So Number one, there has to be an approved cost allocation plan. And a state agency must have an approved cost allocation plan. It has to be filed with the department. So the cost allocation plan is submitted. It is reviewed by the Administration for Children and Family, and then it is approved. Once it is approved, the state can now claim federal financial participation on costs that are connected to the child support program and that are approved in the cost allocation plan. So the first step is to having an approved cost allocation plan. Costs improperly claimed will be disallowed if not claimed in accordance with an approved cost allocation plan, and if the state fails to submit the amendments to the cost allocation plan. So the state must have a cost allocation plan. The costs that will be claimed must be mentioned and approved in the cost allocation plan, and the state must ensure that amendments of the cost allocation plan are filed. There must also be an approved 4D state plan. So that is the next part of being able to make these claims. There has to be an approved state plan. The next thing is that you must be registered to use the OLDC, which is called the Online Data Collection System. That is where the 396 is filed. The 396, which is the financial form, is filed online. So these forms cannot be manually created and sent in for us to input, but it must be created in the online data collection system, and we use the acronyms OLDC. If you do not have access to OLDC, there is a clickable link here to register for a new account in Grant Solutions. So now we're getting down to the general reporting instructions for the 396. States should only submit allowable 40 claims within the 2-year claiming time frame. So there is a 2-year or a quarter time frame that the state has to claim these expenditures that are allowable under the 4D program. The state must submit the claims, like I said earlier, through OLDC quarterly. So we know there are 4 quarters. The first quarter is October through December. It ends December 31st. Those reports are due 45 days at the end of the quarter. So for the quarter 1, December 31st quarter, their report is due, as you can see here, February the 15th. Second quarter report ends March 31st. Their report is due May 15th. Third quarter report, which is what we're in right now, is due June 30th. That report is due August 15th. And then we have the fourth quarter report, which ends 9/30. That report is due November 15th. So the state has 45 days after the end of the quarter to submit those reports. OLDC will not allow any submissions of the report unless it has been electronically signed. So that's why OLDC is needed. And it has to be electronically signed in the system in order to submit the report. Backup documentation is states have the ability to add any backup documentation as an attachment in OLDC for any reporting period. Examples of that would be prior quarter adjustments, backup documentation, any justification that you may have for a variance from quarter to quarter that is more than a 10% variance or 10% or greater. If you want to provide documentation, because the GMS, the grants management specialist, will email you if there is a 10% variance. You can also include that information as an attachment when you are entering when you're entering a 396 report into OLDC. There's also the ability to include that information as an attachment in OLDC. Current quarter claims must be based on actual expended costs and supported documentation. include indirect costs from your approved cost allocation plan. So all of this documentation, claims that are being, expenditures that are being claimed, indirect cost that is being claimed, all of this is applicable to the approved cost allocation plan that has been approved. Estimates from columns E and F are used to process the state's grant award. So I want to pull up just an example here. And we'll go back and forth between this. I eliminated the grantee information on here for privacy. But as you can see, this is a 396 that was just submitted by one of our grantees for this third quarter. So column E is the next quarter estimate, and which is the total amount that the state is estimating they will need for the next quarter estimate. The next quarter we're estimating for here is the 12/31/2024 report. So let me just do a little explanation here. The current quarter is right now, this third quarter, 6/30/2024. And as I just explained, this report was due August 15th. So this is a current report. So in this report, this recipient is giving us the actual expenditures that were made for this quarter. They are estimating the amount of monies that will be needed for quarter 12/31, which is 2 quarters away or 6 months away. So you're giving us your expenditures, but also telling us in 6 months, this is the amount of money that I will need to operate this child support program for the quarter ending 12/31/2024. So that's what this is showing. Explanations are required for cost variances, which I said before, exceeding 10% of the previous quarter. So let me go back to, for an example, say, for example, line 1B. Right here, this recipient is giving us this amount as the current quarter. Next month, if the expenditure, or the next quarter, I'm sorry, the estimates. So next month, if it is a 10% variance exceeding 10%, then an explanation of the reasoning for the increase is needed. And that's where that documentation can be uploaded and attached in OLDC. Now, this is the quarter estimate awarding. This is the fiscal year cycle of the 4D award. So this is kind of the bread and butter of how money is giving. So I'm going to start with where we are right now in this life cycle. So currently we are right here, which is the report's third quarter, 6/30. The report that was due 8/15, which showed the example that I just showed in the 396. So this is where we are right here in this fiscal year cycle. This report is for quarter ending 6/30. And then it also is including expenditures or estimates for the next fiscal year, which will be awarded October 1st. October 1, or the week of October 1, the estimates, you will receive the awards and the estimates. So it'll be a reconciliation of what was reported and what was actually given prior, along with the estimates that you will need to operate for the next quarter. So this is quarter 1 estimates will be awarded here, October 1 of the week of. Then quarter 2 estimates will be awarded January 1 of the week of. Quarter 3 estimates will be awarded in April. Then we have quarter 4 estimates will be awarded July, and the cycle continues. And this is included in the PowerPoint presentation for you to go back and to reference. So each time you receive an award, there is a reconciliation that is going on. You are receiving the current, there's a reconciliation of the expenditures for the actual quarter, so 6/30. But if you go back 2 quarters, right here, This quarter right here is where you actually gave us the estimates that you would need to operate for this quarter. So when this award is issued the week of October 1st, there will be a reconciliation. The reconciliation will show what you actually reported here, what was actually reported. These are the actual expenditures for this quarter. So your grant award will show these figures minus or plus what you estimated 2 quarters ago that you needed. And we'll go into further detail. I actually have an example of a notice of award to go into further detail with that. So we're going with the reporting deadline and timeframe terminology. So 2-year claiming timeframe, like we said there, you have the 8 quarters in which you can report the expenditures for on your 396. Now we're talking about revising, meaning changing, making any changes to the 396. So changing 396 or correcting, you have a deadline. A report can be revised and resubmitted up to the point its submission is used to issue a state's next quarterly grant award. So you have about 90 days to make a revision to the 396 report. 396 may not be available for revision. So a recipient can't just go into OODC after a certain time frame and make revisions. They will have to reach out to their grants management specialist and let them know the reasoning why they need the 396 to be unlocked so that they can go in and make a revision. A state must make the subsequent revisions as prior quarter adjustments. So they can't go in and change numbers after that. So if you get within the 90 days, you can go in and make a revision. But after a grant award has been issued, then a revision cannot be made on the 396 report. Now the recipient has to go in and make a prior quarter adjustment. Prior quarter adjustments, column C, I'm going to pull this grant award up now for you. I'm going to move this here so you can see better. Okay, I want you to be able to see it without me just talking about it. So prior quarter adjustment, which here on column C, increase in adjustments. You can make an increase in adjustment or a decrease in adjustment. So these are the adjustments that are made after the time period has closed for a revision to be made. You have 2 years or 8 quarters to go in and to make an increase in adjustment. So an increase in adjustment is the ability to correct expenditures that were underreported in prior reports. So these aren't new expenditure. These are previously expenses that were reported, but they were underreported. So like I stated before, there is a 2-year deadline or 8-quarter deadline in order to go in and to make these adjustments, increasing adjustments. Deadlines for incentive calculations and audit purposes is December 31st, which is 3 months after the end of the fiscal year. Only data received by OCSS by that date will be used in the calculation of the annual incentive payments and in the publication of statistical data. So with incentives, you have to December 31st to make those adjustments because that impacts your calculation of your incentive payment. Now, decreasing adjustments. Let me see if this report has any for you to view. This report has both. So you have the increase in adjustments and you have decrease in adjustments. Decrease in adjustments that were also, these are amounts that were overreported in prior quarters. There is no limit submitting decreasing claims. When money is due back to the federal government, there is no cutoff. There's no 2-year, 8-quarter deadline. You can always go into the 396 and create a decreasing adjustment. Only the increasing adjustment has the 2-year, 8-quarter time limitation. So now we're going to go into the actual 396. And I was like, I wanted to pull one up that you could actually see data in. I think that would help a little bit with explanation of how the form works and ties into the notice of grant award. So column A and B. Column A is actually the current quarter. It represents the total expenditure, the total dollar that is input by the recipient when they're uploading their expenditures. Column B is the federal share, which will be automatically calculated on OLDC. So this is not a figure that the recipient has to try to calculate themselves. Once they input the current quarter claims, OLDC automatically calculates the 66%. Same thing with column C. Column C represents the total adjustment, which can be positive or negative, because you can see on this one, we have some negative and some positives. So this information dollar is also put into OLDC by the recipient, and OLDC automatically calculates the federal share of 66%. And the same with the next quarter estimate. The recipient inputs the amount estimated for need for the next quarter, and OLDC automatically calculates the federal share. So now we're going to move on to the lines, the various lines here. So the first line we're going to walk through is line 1A, which is, you can see that the administrative costs with incentive payments. There is no deadline for expending these funds, as you know. However, once expended, the amounts must be reported within the same 2 years of time frame as the expenditure. But as you can see, when it comes to the federal share of claims, these expenditures are not eligible for federal reimbursement. So there is no federal share when it comes to administrative incentive payments. So they're simply reporting incentives that were used, but there's no federal share that will be reimbursed for incentive payments on line 1A. The next line we have is line 1B, which is administrative expenditures. So we know administrative expenditures are eligible for federal reimbursement, subject to the 2-year claiming time frame. So that's what is captured on this line 1B. The actual expenditures that the recipient is claiming for administrative expenditures. Then here in column B, you see the federal share that was calculated from the actual expenditures entered by the recipient. One C. So here on line 1C, only select activities and expenditures related to non-4D cases and orders are eligible for federal reimbursement. So administrative costs non-4D. Only select activities and expenditures related to non-4D cases and or orders are eligible for federal reimbursement. That is what is found and calculated on line 1C. And there's also some guidance that there's a clickable link on the PowerPoint slide that I will send out that will give you more information if you have questions on that as well. These expenditures are also subject to the 2-year claiming time frame. So I want to move here to line 2A. Line 2A talks about program income, fees, costs recovered. So this is the total amount of income received by the state, and it's the amounts that are reported on this line offset the administrative costs. So in other words, the administrative cost that has been totaled here is 167, and then a federal share of 110. Whatever is collected on lines 2A and 2B as program income reduces the amount of the administrative cost that is claimed. So it's an offset. Mandatory or optional fees collected from recipients, so child support enforcement services, mandatory fees that the state has opted to absorb rather than collect from recipients. Those are what are on these lines. Collections are received directly from either custodial or non-custodial parents. Any collection fees the state has opted to charge for collection for services for 4D or 4 non-D cases that is not inconsistent with the federal law. Fees for laboratory paternity testing. That is what is captured here on line 2A. Line 2B is program income interest earned. So interest or investments income earned when child support collection fees or other program income funds are deposited in an interest-bearing account or used in other investment type activities. Also, undistributable child support collections reported as abandoned property on line 9A of your 34 report. That's the dollar figure that is captured here. But anything that's considered program income, like I said before, reduces the amount or is deducted from this administrative cost amount here on line 1C, which now gives you the net administrative cost. So you have the 110,310 minus the 143,929 minus the 459,059 now gives us our net administrative cost. I'm sorry, clicking through my slides here. Okay, lines 4 and 5. These are your ADP, your development, system development, whether it's in development or operational costs. Operational will be the maintenance of that child support system. This development cost will be the development, the plans. All of these are on an advanced planning document that has been approved. So these are costs that are going against what has been approved on those APDs, whether it's operational or whether it's development. These costs are claimed on these two lines, lines 4 and 5. Line 4 is your developmental cost of those systems. Line 5 is the operational cost, and which is added back into the expenditures that are being claimed for this quarter, which now gives you your total cost claim. So we've taken our administrative costs, we've deducted our program income, and we've added back in our developmental and operational costs, which is now giving us the total cost claimed. And if you go back across here, I just want to go across, you have your prior quarter adjustments. So our prior quarter adjustment in this scenario is a negative amount. So that lets us know that this was a decreasing adjustment. So we have this decreasing adjustment here. And then here on our next quarter estimates, we see where they are estimating total expenditures. And then this is the federal share of what would be reimbursed, what is considered the federal share of these next quarter estimates, and that's where this $13.9 dollar amount is coming from. So this is our first section of the 396 form. So now we're moving on to our section B, which is fees for services. Here, so line A, it says reserved, no dollar figure is putting there. That is a line that is just reserved on a 396 form in case, and for future references, if something is needed to be added to this form, there is a space reserved for that under the section of fees for services. So that's why you see the word reserved in that line. Now we have line 9, which is our federal share of 4A collections. This is the portion of collection used to reimburse the federal government for its share of past assistance payments under Title 4A. So that is what is reported on this line. Then we have line 10, fees for the use of the federal parent locator service. Those expenditures are included here. Then line 14 is the net share of federal expenditures. So this is giving you your total federal share of everything from the Section A, which were the expenses were reported, and then Section B, where the fees are reported. So this is giving you the total amount. The fees that were reported are also reduced from the total claims amount. And this is giving you now the total federal share of the 66%. And then this is the 34%, which is the state federal share, which is line 15. So I'm going to move this over here. I'm sorry, I'm trying to share my screen on another one. Okay, so the next part we have is part 2. So I was trying to share that screen without closing everything down. So part 2 is this section right here. This is the prior quarter adjustment part of the 396 form. And I know that was a question that came up where some was unsure of how to access the part 2 of the 396 form. But when a grantee begins the 396 financial report, you also automatically have access to part 2 while you're working on part 1. So part 2 is where the prior quarter adjustments, whether it's increasing or decreasing, is made, and then you can add detail of this information. So we'll just use the form that I have up. I want to show you a blank one, but we'll just use the one that we have up for time's sake. So as you can see here, they have the total amount that was put in, the adjustment. Again, OLDC does the calculation of the federal share. And then this is the funding category. The funding category, there is a legend that's at the bottom, and I'm showing it to you now, that explains what each funding category is. It gives you the breakdown of the funding category. That's what is selected here. This next column, column D, is where the recipient will place the applicable fiscal quarter. What quarter did this occurrence take place? This is where that information is placed in right here. And remember, with increasing adjustments, you only can go back 8 quarters for increasing adjustments. And then line E is where detailed information can be placed, what the adjustment is for. If it's for if this one's for a particular audit, unclaimed property, whatever the increasing or decreasing adjustment is, the information can be input into part 2 of the 396 form. And again, those are your funding categories at the bottom. Trying to share my screen. Okay, I'm gonna have to switch screens. I'm going to stop sharing for just a second. And share again.
Rhonda, while you're doing that, there has been some questions in the chat. Do you want to take the first one while you're working on that?
Yes.
So the first question that came in is that when you were talking about the 2-year limit for claiming, they've asked if the exceptions to the 2-year limit that are found in 45 CFR 95.19 are still in effect.
Yes, they are.
Thank you. And there's another question I see about the 396, the updated 396 instructions. So I do know that the 396 went through a process for its renewal as it stands with no changes. I don't know exactly in the process where that announcement is. I'm trying to find that out, but the instructions at this point didn't change any, Tanita.
Correct. Yes, there were no changes to the instructions. Do we have any more questions, Melissa?
That's all I see in the chat at this time. Thanks, Rhonda.
Okay, thank you. Okay, so now I'm going to share notice of grant award. Share my screen again. Okay, so just to reiterate what we just went over on the 396. So that was a walkthrough of the line by line of the 396. So how it all ties back into the notice of award. So this is an example of a notice of award here on the
Hold on,
screen.
Rhonda.
I'm
Would
sorry.
you mind,
Okay.
would you mind putting this into the presentation mode to up at there, the second button that says from current slide, so that'll make
Oh,
it larger.
okay, they can't see. Is that better?
Thank you.
Okay, you're welcome. So as you can see, this is just an example of a notice of award. So we just walked through line by line. So I just kind of want to go over how this ties into the 396 was input on that, how it ties into this notice of award. So for this example, we can see here that this award is for this period of July. This is an older one through September of 22. So each line of the lines that we went through that are applicable for awarding, you see how those current quarter claims are here. So it's giving you the current quarter claims, it's giving us those prior quarter adjustments. As we can see, this is a negative number. So this is a decreasing adjustment. And then those are the fees and collections, which is also deducted. Then we have the development costs here. Then here to the right is giving us the total claims, actual claims, not estimates. These are actual claims for this quarter. But remember, as I stated, 2 quarters prior or 6 months before this quarter actual expenditures are reported, the recipient estimated the dollar amount that they felt that they would need to operate during this quarter. So that's what you see here, funds advance. You see for the period, it's the same period of the actual allowable grantee claims, because now this is where the reconciliation takes place. This is where we're saying, hey, I'm submitting this report. This is what we actually spent. So it's like a checkbook. This is what we actually spent. I know, but the advancement you gave us was for this amount. So as you can see, the advancement 30.4, actuals was this amount. So as you can see, they were over advanced. They overestimated. So now this award is also providing estimates for 6 months from now. So what your recipients are saying they're going to need in 6 months to operate for this period, this is the amount. So that's all what's being included on this award. And then once you get this, when we get to this quarter, 6 months from then, we'll be reconciling, doing the same reconciliation or second reconciliation over again, the actual claims versus what was funded in advance. So that's, and then, so that is done. Let me go back here. So now this is giving you your total award. And these are the grant document numbers at the bottom where you would go into the PMS system to view those funds and to draw down those funds. So now with the payment,
Rhonda,
I'm sorry, yes.
before you move on, if I can, there's a question in the chat that says the instructions say for variances, if it's an increase or decrease greater than 5%, but did you just say 10%?
I did. That may have changed to the 5%. I can verify that for sure. And then there'll just be an update I need to do to my slides. But I can ask my specialists, they are on the call as well, if one of the GMSs could maybe answer that question. And if
This is
not,
Kathleen, I just checked the instructions and it does say 5%.
okay. So we need to, thank you, Kathleen. So we need to update our slides to 5%. Thank you. So now we're moving on to the payment management system. So the payment management system has multiple access levels are available, so you can log in here, or if you do not have access to it, this is also where you will request access to the payment management system. So if you need assistance with requesting access, you can reach out to your grants management specialist or myself, and we can assist with you gaining access to the payment management system. And this is just a screenshot that's included in our PowerPoint just to give you examples of what PMS looks like. So this first one, it says active grant within balance. So it's just showing you here, this is the authorized amount, and this is the amount that has been drawn down. And then here, this is just an example, project period expired, but there's a balance. So this was what was authorized, but after the close of the project period, this is what has been drawn down. So after, I believe it's May 2nd of the fiscal year, any amount that has not been drawn down by May 2nd is set for deobligation. So the GMS works with the recipients to get those drawdowns up to 100%. But any dollars that are remaining after May 2nd could be deobligated. That is our statutes that we're utilizing in the Office of Child Support. This last one gives you an example. Project period expired, but it's fully expended. So you see you have the 8.9 was authorized, and that's what was fully drawn down in PMS. So these are just some examples of what PMS looks like once you log on and put in the grant document number, which is this number right here. I'm sorry.
Rhonda, before you move on, I do have a question in the chat.
Uh-huh.
It says estimates are usually placed into the PMS account within the first few days of the quarter. For quarter 3 and quarter 4, if a state underestimated, is there a general time frame for the additional authorization to be placed into the PMS account?
Could you read that again? I'm sorry.
Estimates are usually placed in the PMS account within the first few days of the quarter.
Okay.
For quarter 3 and quarter 4, if a state underestimated, is there a general time frame for the additional authorization to be placed into the PMS account?
I will have to get back with them on that unless the specialist can, because I don't want to just throw out any information without it being accurate. Unless one of the specialists can answer that, I will want to make sure I get clarity on it before I respond to that question.
I think that we usually do them at the end of January. And then there's a 90-day drawdown requirement. So you'd have 90 days to draw that, and it would need to be by the beginning of May that you finish pulling all the funds from PMS. But late January is usually the time frame. Give us a couple weeks wiggle room though.
Okay. Thank you,
That'll be the final
Kathleen.
reconciliation for that year, for the previous year.
Thank you, Kathleen, for the information. And then this is just some resources that are included in this PowerPoint slide. It gives you an example of the 396 form. It gives you the instructions, and these are the federal regulations that must be adhered to by the recipients to operate the child support program. This is also information for grant solutions and for PMS. It has the hyperlink to email as well as the phone numbers. If any recipient is running into issues with either grant solutions or PMS, if they can reach out to their grants management specialist for assistance to see if something that they can kind of help move along as well. And then this is my information that you will find also on the PowerPoint presentation that you will receive. Each state territory has their assigned grants management specialist. If you're having difficulty in locating who that person is, you can reach out to me and I can let you know who that is, and they can assist you with any direct questions that you may have regarding your particular state or territory. And that is my presentation. Okay, there we go. So are there any other questions? And like I said, I'll make sure I send this out immediately to Melissa and her team, but I want to update that 10% to 5% before I send it out.
I don't see any additional questions in the chat at the moment.
Okay,
Just some thank yous coming in, Rhonda.
thank you. And thank you to my team that was able to join as well and be support for QA.
All right. Again, as I mentioned earlier, we will distribute out the slides and the recording to our state directors listserv. Those that may not be state directors will be able to access the recording as well from our state agencies page that I did put a link to that page on our website. In that website, you'll also find under the fiscal training, the earlier notice of award training that Rhonda provided earlier this year. So give us a couple weeks to get that posted to the website, but we will strive, probably it'll be next week when we can get the email out with the slides and with the recording. But we thank you for joining us today. And as always, have a great afternoon and celebrate Child Support Awareness Month. Thank you,
Awesome.
Rhonda.
Thank you for having me. Bye-bye, everyone.